Now, for just a moment, I'm going to change from my IBIS reports to a slightly different one. I wrote this up a number of years ago, and it's set to tell you the 6 ways in which a reverse mortgage can terminate. I know that there is a 7th way listed down here. I'll come to what that means in just a moment. But primarily right now, these loans will terminate after one of these 6 things happens. First and foremost being the death of the borrower or borrowers. At which point, presumably, you as the borrower no longer care what happens. It becomes your children, whoever you're leaving the property to, it becomes their responsibility. It's no longer yours. I'll come to what they need to think about when I get to page 4, but for you personally at this point, it no longer matters. Second is if the borrower is no longer continually residing in the property. Right now, there is a limit of 6 months. If you're out of the property for more than 6 months, they will call the loan in. They will give you up to a year for medical reasons, but right now, 6 months is kind of where things are standing at. If you're going to be in for, they don't care, by the way, whether it's a round-the-world cruise or a nursing home. If a single borrower is out for more than 6 months, or simultaneously co-owners are out for more than 6 months, they will call the loan in. They will give you up to a year for medical reasons. And I always encourage you, call sooner rather than later. Say, God forbid, you should fall and break a hip or something, that between the hospital and rehab you're going to be in for about 9 months or so. Call them right away and let them know. Do not ever play technical games with banks. Banks are extremely good at technical games. Don't wait till day 179 to give them a call. They'll find some way to mean they came in on day 184 and it's too late. Call them early, let them know. The sooner you can call them, the better. Make sure you have a house to come home to. Third one here, if you sell the house, for some strange reason, they want their money back. Go figure. The fourth one, you have to maintain the home. Now, nobody really wants to live in a shack, so it's something you're going to do anyways, but you have to plan on maintaining the home. This means keeping up to the minimum standards set by the FHA. Now, these standards are basically safety standards, so I wouldn't concern yourself too much with them other than to make sure that you have to maintain the property in that range. They can argue with you. This is one of the reasons why they sometimes have someone taking a picture of the house. If they see there's a hole in the roof, they're going to want you to fix it. These are things you've got to keep in mind. You have to pay your homeowner's insurance. Now, just like you, if something happens to the property, they want it fixed. So you have to make sure that you keep the homeowner's insurance up and that you keep them advised on what's happening. Most lenders, if not all of them, are going to require that they're a payee on your homeowner's insurance policy. Keep this in mind. The next one is taxes and/or condo fees. Keep in mind, you must always pay the taxes and condo fees. This is your personal responsibility. You do not have a choice in these matters. If you are having a problem with either taxes or condo fees, if you have a condo, immediately call local HUD housing counseling agency and ask for help, preferably before you are late in the taxes. If you are late in the taxes, call right away and get help. Do not wait. Taxes are a primary problem. These loans are what are referred to as non-recourse loans. The only recourse that the bank has, or the lender has, is to the house and the property. They can't go after you or your heirs for any additional money. The house and the property are it. Therefore, they want to be first in line at the registry of deeds, making sure that they're first. Taxes, because they're from the government, always come in first. And a condo fee, just because it's kind of like having a little mini local government, comes in before everything except taxes. So if you have a condo, you've got to pay the condo fee and the taxes, and if you have a regular house, you have to pay the taxes. Do not neglect this. This is of primary importance. Practically speaking, You cannot, at least in Massachusetts, take a tax deferral. You can take a tax abatement, but not a deferral. A deferral means the taxes are still owed and they're hanging out there. An abatement is a forgiveness of a portion of the taxes. If you have never checked and you're in Massachusetts and you've never checked your town or city for an abatement, I highly recommend doing so. Don't ask so much what you fit into, ask them to tell you what all abatements are available, and then you try to determine if you fit into them. Here in Massachusetts, it's very common to have abatements for age, for income, for age and income, for marital status, a widow or widower can get a tax abatement, for certain veterans, certain Gold Star parents. There are a lot of reasons why there are tax abatements out there. Do plan, by the way, if you do take a tax abatement, you're going, at least in Massachusetts again, you're going to have to take those abatements every year. You'll have to go down and apply for them again, year in and year out. Yes, I know you're not getting any younger, but they need to make sure that you still own the house, and that's their way of doing it, is to have you come in to apply for the tax abatement. The seventh one that I have down here hasn't happened yet. Now this seventh one, I kind of expect is going to come in. HUD's floated it out as one of the possible changes a couple years ago, and that's utilities. Most towns, at least in Massachusetts, own their own water. Some towns also own electricity, sometimes also own their own gas, and some own all three. If it's a payment to the town, it comes first. They're going to make sure that you make the payment. Keep this in mind when you're looking at these, that you've got to make sure that you get those tax payments, those utility payments in. Again, this has not happened for sure yet, but I do expect it to happen anytime. Now, if you were with me in person, I would be making you sign these. I call this my cover your agency statement. I can't prove that I've told you all these things unless I get you to sign. So you're not with me, you don't have to sign it, but please keep these in mind as you go through this process. These are all extremely important to you.